Hi, this is Michael Rony Mullick, and in this video, let us understand how you can invest properly in this highly treacherous market where we are seeing the indices like Nifty and Sensex giving negative returns. Even the bluest of the blue chip stocks are falling 20-30%. So investors are puzzled and they are looking for safe avenues to invest. So whenever we are talking about safe investments, definitely the term dividend comes to our mind. So in this video, let us understand some of the stocks which are high dividend yield stocks, and also we will be adding some fundamental parameters along with it to refine and get a proper list. So in this video, I will be using a free website called screeners.in. The link will be in the description below if you want to check out the website. So the website is absolutely free to use. You just have to log in using your own Gmail account, or you can even connect your Google account as well. So the website is absolutely free to use. You can create a free account or even sign in using Google as well. So let us jump into the website and show you how it's done. So this is the screeners.in homepage. I have already logged into my account. So over here, you will be seeing these on the top left hand corner, you will be seeing feed, screens and tools. I'll be clicking on screens, and from there you have this blue color button which says create new screen. I'll be clicking on that. So let's click on the create new screen. So over here we have a query box, and on the right hand side we see an example of how to write the query. So our first query, like I said, is our motive is to find high dividend yield stocks. So just type in DI and you'll get dividend yield automatically popping up, and dividend yield, let us say greater than 10% per year. That is pretty conservative. We are done with this. Just click run this query. So whenever you click run, we see a list of 14 stocks which are listed right here, and all of them are paying dividend well above 10%. So this is 14 stocks, and some of them are not really risky. You have small caps stocks here as well. So let us refine the list a bit and narrow it down further. So to narrow it down, you just have to scroll down a bit. Again, this query box is appearing, and click on space. And over here, if you want to add more parameters, which we will be doing, so you have to write and automatically you will be taken to the next line. So over here, let's add a second parameter, which is let's say average return on equity. So average return on equity, whenever it's already showing, let's say 5 years. So for the last 5 years, average return on equity, let's say it is more than 15%. So last 5 years return on equity more than 15%, and let's click on run this query. So from 14 we have come down to 9 companies. So these 9 companies have returns on the equity that is invested of more than 15% for the last 15 years on an average. So this is 9 companies. Now let us narrow it down further, because over here we have some high overvalued companies and also companies which have high amount of debt. So to filter this further, let us add another couple of layers of filtering. So as I've shown you, and is what you write, and you're taken to the next line. Over here, let's add price to earnings ratio. So price to earnings, yes, this is the second one. I'll be clicking here, and price to earnings, over here, the lesser the price to earnings, it's better. So let's say less than 10. So over here, it's important to know that price to earnings means the price of the share currently trading divided by its earnings per share. So the lesser it is, it means that the stock is rightly valued, or sometimes it is undervalued, and the higher it is more difficult to get a proper returns from there, because it's already highly overvalued. So companies like Nika, it has a PE ratio of 1500, and also there is a common understanding where, in simple language, PE ratio means the amount of years it will take for your investment to double, given the company has no growth or it does not decline in growth as well. So if the company remains stagnant, how many years it will take for you to double your investment. So in this, we have written 10 as the parameter. So if we do not see the company growing or declining in growth for the next 10 years, our money will automatically double. Now this is again a common understanding. This is not exactly how the things work, but it is commonly used. So that is price earnings ratio for you. So price earnings ratio is less than 10. I told you the lesser it is, the better. And let us add another parameter with this. So we click on and the fourth parameter which we will add is debt to equity. So debt to equity, yeah, we have the second one, debt to equity. Again, for this, the lesser amount is better, so let us write 2. So for debt to equity, we want the lesser the company to have less amount of debts, so that is why we have written 2. And now we will click on run this query. Now you see that the list is further reduced to just 5 stocks. Now we have the 5 stocks highest dividend yield, along with fundamentally strong, which we can say is Vedanta, NMDC, Indus Towers, BPCL and IOCL. All of these have a dividend yield of more than 10%. Vedanta leading with 14.76%. Then we have BPCL 13.49%, then NMDC 12.18%, and the rest. So all are well above 15%. The PE ratio, you can see all are below 10, which is good. And also the return on equity is more than 15. So it means that on an average, it is earning more than 15% a year, which is a good sign of a growing company. So this is how you narrow down and filter your own companies. Now over here, I have shown you 5 parameters or 5 fundamental ratios to analyze. Now there are multiple ratios which you can use. So I'll be sharing with you a list of important ratios which you can keep in mind to do your own research. So this is the list. So before doing an investment, you can look on these ratios. So earnings per share, price to earnings, price to growth, price to sales, debt to equity, return on assets, return on equity, and return on capital employed. Now you can take a screenshot of this frame and use it for your research work. Whenever you're sitting to analyze your own stocks, maybe you can refer to this frame. So this is some of the important ratios which you should be keeping in mind. With this, I hope I'm able to give you some information with which you can prosper in your investment journey. You can do your own research as well. I've shown you how you can use screeners.in website. Again, the link will be in the description below, and also you can use the parameters which were said in the video to do your own research and come up with a list, and then make a proper intelligent decision regarding your investments. So with this, I'll be ending this video here. Thank you for watching.